Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Mr. Daniel Yu, global strategist at Yuanta Securities. Mr. Yu, good afternoon. Thank you for coming on today.
Good afternoon.
Well, there are concerns about the potential economic impact of the Delta variant of COVID-19, and that seems to be part of what sent stocks lower overnight in New York. All three main indices down about 0.7, 0.8%. What's the story in the global markets?
Yes, as you said, if you look at the U.S. market, it has fallen quite significantly during the day. Did recover slightly back, but nevertheless, it was quite weak day. Dow fell by 0.75%. S&P 500 lost 0.86%, and also Nasdaq was down by 0.7%. Right now, people are concerned about this COVID-19 variant and also U.S. economic growth rate picking, and that means that the overall earnings might be picking as well, and that's why people are concerned about the U.S. economic condition as well as global economic conditions, and that has resulted into sell-off of the selling of actually net buying of the bonds, resulting into the 10-year government bond rate falling sharply to 1.28% or so. Even though today it is coming up a little bit to about 1.33% or so, but nevertheless, it is one of the lowest number that we have seen in a very long period of time. Because U.S. market have been continued to be going up and continue to be breaking the recent records, but I guess now investors are worried about the recent growth peaking in U.S. and that on the abroad, obviously the new COVID variant might hurt the global economic outlook. However, though, we think that this is not going to be lasting for a very, very long time. That the correction might be a short-term correction as the economy continues to continue to show recovering phase as far as the U.S. as well as global are concerned.
And much the same story today here in Korea. Stocks down by quite a bit, in particular because of the stronger distancing rules to take effect because of the virus. The KOSPI down to around 3,200 points, and not many exceptions to the declines today. Tell us about the domestic market.
Right. If you look at the beginning of the market, KOSPI actually plunged as much as 1.8%. But did recover, but nevertheless, still it fell by about 1%. The Kosdaq is also down by 0.54%, but it actually did better than the KOSPI. Main reason for this kind of correction is because foreign investors are the major seller of the Korean market. They net sold about 1.3 trillion won worth of Korean equities, and also the institution continues to be seller as well by about 500 billion or so. Only the retail investors are the one that bought about 1.8 trillion won worth of Korean equities. If you look at the economic condition with the concern about the COVID-19 variant, the toughest social distancing rule of level 4 has been administered, which means that would result into quite weak domestic consumption numbers. Obviously, the more than 2 people gathering is not going to be allowed. That means that it will be negative news for the mom and pop shop as well as restaurants and etc. So this is the key concern about Korean retail investors as well as the Korean equity market. If you look at the government bond rate as well for Korea, it has fallen to low as about 2%, while the U.S. rates actually fell down to about 1.285. So all in all, this is the key risk at the current point in time that maybe the COVID new variant might affect the global economic growth rate as well as Korea's economic growth rate to be slowed down. And that means that the earnings might be peaking as well for the second quarter, and then going to the third quarter might be weaker than expected. So all in all, this is affecting not just Korea, but I guess on the global scale.
Right, and as we look at the exchange rate, it's risen quite a bit this week. The Korean won now at almost 11.50 to the dollar, and that's in the upper range of what we've been discussing recently. Is this simply the coronavirus situation in Korea, or what do you see happening with the exchange rate?
Right. I think it's just the sentiment that is affecting the currency. If you look at the Korea's current account surplus, it continues to widen to 10.76 billion in May, which is one of the strongest number. And if that's the case, then not just the current account, but trade surplus continues to be very strong as well. So all in all, the only concern about the Korean won is because of the consumer debt level is high for Korea. But with this COVID-19, I think that consumer debt level is not going to be the major issue per se. But I think obviously the sentiment is affecting negatively that if you look at the U.S. dollars, it has strengthened, and that resulted into the weaker Korean won versus U.S. dollars. But however, though, the fundamental-wise, there's no reason for Korean won to depreciate further. As you said, it is at the upper end of the trading range per se. It is now at as high as 1150 level. In the past, when there was a big concern about Korea, it did go up to 1200 plus. I think the peak was around 1220 or 1230 or so in the past. So I think that people might be thinking that it might happen to that kind of level. However, though, after the COVID-19, if you look at the overall economic growth rate, Korea is one of the better ones relative to any others, along with the U.S. So therefore, we think that the currency should be stabilizing, and that means that the Korean equity market would be also stabilizing as well. Only concern that we saw in the short term was because foreign investor net selling coming through that results into the currency depreciation. But we don't think that that will last long on the basis of fundamentals.
Well, now the big cryptocurrencies are a little lower this week. Of course, it was earlier this year that they took the big fall, but right now Bitcoin is at about $33,000, maybe a little under that. Ethereum back down to around 2,100, and there continues to be news, of course, about more regulations on crypto. What's the story in crypto right now?
Right. I think earlier we talked about how U.S. government bond rate has fallen to 1.3% below. Obviously, that means that the asset for the riskier assets demand is actually have weakened quite significantly. The safe asset, obviously, government bond is in favor. Obviously, that resulted into Bitcoin or Ethereum or any other type of cryptocurrencies showing a quite sharp drop. Right now, Bitcoin remain at about 33,000 level. Which is half of what it was to be the peak at the beginning of this year. We think that Bitcoin and other cryptocurrency would be in a range bound because it's still, if you add all the cryptocurrency value, from the beginning of this year to now, it has risen by more than 80% YOY, year to date. So clearly that means that still people were in favor of the cryptocurrencies. However, if you look at the cryptocurrency as a part of the alternative asset, and when we say alternative asset, it includes gold, silver, and cryptocurrencies, the total size of that market or the market capitalization of these three major alternative assets actually hasn't really changed much other than cryptocurrency rising quite a bit, which means that we think that the value of these alternative assets should further rise in the future because if you look at the M1 growth rate of the U.S., it did go up by about 7.8% year to date, and also it's up by 18% year on year. So, which means that the value of the currency has dropped, and therefore the value of alternative assets and alternative currency should increase. So that's why we think that the cryptocurrency as well as the silver value and maybe even gold might be showing a rising trend going forward. Yesterday, we did see some correction. However, though, We think that it should stabilize with the abundant liquidity that we're seeing. And on the longer term, however, though, it might take much longer time for the cryptocurrency to further rise because we still have a quite significant level of the regulatory environment where the U.S. government as well as Chinese government are tackling this quite aggressively. That it might be just part of the alternative asset, but it will never substitute the overall currency. So all in all, trend might be stabilizing, but nevertheless, in terms of the interest towards the cryptocurrency, it's much less than what it used to be.
It does seem that way. All right, Mr. Yu, we'll have to leave it there for today. Thank you for sharing your insights with us as always, and have a great weekend.
Thank you. Have a great weekend.